Listen, it doesn't take a rocket scientist to see that there's a clear bull flag forming at the all-time highs in the S&P 500. The question just becomes, is it too obvious of a play to break out from here without a little bit of a shakeout first? Markets got their inline CPI this morning and then things got quiet. I'm talking almost too quiet. But it's just push-pull, right? We are seeing the mega caps lag, specifically the lag 7 as they say, as high beta growth names get right back in gear. I mean, look no further than NBIS gapping up and closing up 34% versus a previous day's close. So is it really too quiet, or do you just need to know where to look? Welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description and stay tuned until the end of today's show. I've got 9 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight with a closer look at the SPY daily timescale, and do we really need to overcomplicate this chart? This is the all-time high, which of course means it's the highest high in the trend count, and this is a set of soft higher lows because the hourly trend has not flipped to down, so we'll say SHL. So nobody's really arguing that we're in a daily downtrend. We know this is beautiful bull flag consolidation. You could basically put this in a textbook. It's happening over the previous all-time high. Nobody's arguing here that we're in a daily downtrend and this is a bear flag. It's the exact opposite. So where we should spend our time and focus is how do we actively get involved in this particular setup? As mentioned in the intro, it might be a little bit too easy, but this type of bull flag breakout is definitely reasonable. A Brigade bolt offering a tight risk entry here over the all-time high, not a bad idea, right? Some form of continuation that looks like that, as long as you can manage your risk against that all-time high at 776.85, not bad. But if it is too easy and the market's going to make things a little bit more tricky, it wouldn't be unreasonable that the market could shake out the bottom end of the flag, maybe tag the 8 EMA. There's an anchored VWAP in there as well. We'll see on the hourly chart. The key point is that you'd have to break this low from Tuesday, as well as Thursday's low from last week. Then if you can reclaim back above 769.50 for an intraday higher low, hourly higher low, 15-minute higher low, something of that nature, if we could use a stop underneath whatever that intraday pivot is, you still have tight risk reward back to the top of the flag. Ideally, we would consolidate sideways for a day and then Brigade bolt for continuation back into blue sky territories after everybody got all bummed out that, hey, the bears are taking over and the flag's failing, right? That's another tight risk way to get involved here off that look below and fail. The alternative, which we talked about on Saturday, was an even deeper pullback, which once again, may be a little bit too easy, but at least we'll look for it. If the market pulls back into the prior all-time high and can sort of give you that look below and fail, something of this nature, and we go gap fill reversal, everybody and their sister's brother's mother will be looking for it at that particular level. Once again, the key point here is to say we have tight risk, reward back to the low end of the flag first, and then hopefully ballooning runners back up to the all-time high. As mentioned in the weekend video also, could this be another one of these setups that's a little bit too easy? Maybe, which is why I would be willing to give the market the benefit of the doubt, right, all the way down into this level, which is the prior left side peak, at 754.75. If the market could support that, you could start to see how the daily 20 SMA is going to be in that neighborhood over the span of time. We're not saying this has to happen in like a single day's session. It could take a couple of days. I would also be bullish on the hold there, as well as the reclaim of the prior all-time high. Those are two really tight risk ways to get back involved on the long side. Risk reward here back into the all-time high. That's like a 2R right back to the high. You could trim. And then if it goes higher, great, gravy. Or you're a little bit more patient. You're waiting for that reclaim over 260.25. Then you say risk reward just as you would if it does give you the easy setup in here like that, right? So those are really the only outcomes to be focused on. And again, nobody's arguing that this is a downtrend and this is a bear flag. It's a bull flag at all-time highs. The supporting evidence categories are really firming up and starting to look good. I mean, you tell me, is the market bullish or bearish when we have NBIS ripping to the top side on earnings, taking out all these highs, reclaiming the daily 50. Look at the volume in here. You know, that's not going to happen in a bear market. I don't think so. So we go back to the spiders and we say, okay, well, if that's the situation, but yet you're still somehow bearish, okay, fine, whatever. I get it. You could trade both sides of the market. That's cool. If you're bearish, at least tell me that you're waiting for a look above and fail on the all-time high. At least tell me that you're looking to get active as we break down underneath the flag lows. That way you could say, once again, I've got a tight risk entry. Risk reward here, back to the flag lows. You want this one in there? It's risk reward back into the previous all-time high retest, right? If you have these tight risk entries, I can't fault you for trading either way. Although personally, I would prefer to look at this as a bull flag with supporting evidence firming up. High beta and growth is starting to work. Mag 7s are lagging, lag 7 as we said. You know, it wouldn't be unreasonable that the market tries to at least hold sideways and then go higher, right? We just had a CPI print that came in line with expectations, so we're all clear there. It's not like we have a hot inflation print and suddenly rates are flying off the handle. It's not the case. So that's what I'm seeing here on the Spiders Daily. Let's go ahead and grab ourselves a little bit of a fib extension. I think this is interesting just to see where it goes. There it is, up at 8.15. Not calling for 8.15 into the end of the week. Would I be thankful if it happened that way? Sure, great, awesome. Long-term portfolios rejoice. But honestly, I'd like to see a little bit more of a tame move than that, breaking through the upper bound of the weekly expected move. Let's drop it on down to the hourly chart. Let's see what we can see over here. Just really, really tame consolidation, right? A little bit of a gap up this morning on the positive CPI print, or I should say in line, and we go sideways all day. What I was mentioning is that the arbitrary high or low may not be all that arbitrary if we throw on the intraday anchored VWAPs. Notice once again, you've got a couple in here. If you wick off the flag lows, you've got the anchored VWAP from last Monday. If you wick a little bit lower than that, towards that 8 EMA level that we were just looking at, so shake out the entire flag lows, then reclaim 769.50. It's your anchored VWAP from Friday's session of 2 weeks ago, which of course was really when the trend started to show you its hand and say, okay, we're changing here. There's your intraday high or low, right? So those are the levels to be paying attention to. To give you a number here, this will drift slightly higher. It's a moving target into the end of the week. That's going to be around 765.50s. And once again, your 8 EMA on the daily is in that neighborhood as well. The current value is 767, just a little bit further north than the level we just described with the anchored VWAP. So that's the situation I would pay attention to. Let's jump on into our market internals. If you're not familiar with this dashboard, check out the video tutorial in the top right-hand corner. Look at the volume flows. Are we reading into this? I don't think so. I mean, the market is going nowhere fast. We are time correcting after a ripping rally in the upward direction. Monster move. Time correction is A-okay. How do you correct price movement? Two ways. Via time, which is what we're currently getting, or via price, aka what? R. What the heck's up with that? This should be a P for price, or via price, aka a pullback. Right? And right now we're getting the time correction, which is actually more bullish, right? It's just telling you that sellers are unwilling to unload this. Anybody who bought it is unwilling to take profit. You just don't really have a new wave of new money buyers getting involved yet. So time correction up here is very bullish under the premise that, again, volume is not leaving the market. You can see the advanced decline line looks fine. It's not in trend higher or lower zone at all this week. The index score is not doing anything unhealthy in here. It's natural. It's fine. And the cumulative builds on the tick really aren't getting all that aggressive. On Monday, that was the worst selling we saw this week in terms of the way that the cumulative exchange level data was coming in. It's only a negative 3,000, right? Or what was it, negative 3,600 or something like that? 3,200. Substantial reads are beyond negative 5,000 in this situation. So I'm not seeing it at the exchange level. Nobody wants to unload their longs. Nobody's really aggressively shorting, right? Let's jump on over to the market profile. If you're not familiar with the market profile, check out the video tutorial in the top right-hand corner. What do we see here? Where is value developing? Here is what would that be? That was last Thursday, Friday. Here's Monday. Here's Tuesday, pretty expansive range, but again, look at point of control. It's higher in the session. Then you can see here, just inside value. Very, very balanced market here on our hands, which once again, doesn't make sense to do a ton of analysis in a balance range. We are basically looking for those exact outcomes. Oops, I want to auto zoom here. We're looking for those exact outcomes I just described as potential entry tactics with tight risk to get involved in this flag. With that, we move along to the QQQ Cash ETF. Obviously, we're not trading at all-time highs over here in the Q's Cash ETF, but you could see we are certainly trading towards the upper bound of the previous junk drawer. We're trading over the daily 50 SMA. We're trading over the daily 8 EMA. We're well above the daily 20 at this point. And this Tuesday low, which of course is the follow-through day low, has been preserved. We have not even tested that. As a matter of fact, you've got lows. Maybe you call that a soft high or low. That's when the trend really started to show its hand. That's that same Friday session we just compared to on the Spiders Cash. And then, of course, in here, this is a higher low. This is a soft higher low. You don't really have an hourly downtrend in here. You just kind of have balance action. So in my view, any consolidation up here in the upper 50% of the previous junk drawer range is constructive. You're staying over the 50 SMA. Yeah, you gapped it up on CPI and couldn't get any higher. It just doesn't seem like anyone wants to unload it in a big way, though. I mean, look at this. This is a down day, right, in terms of from the opening print, but your volume is hardly anything. It's technically an up day by about 73 basis points from the previous day's close. There's no real active sellers here. There's maybe a little bit of profit taking into the open, but that is it. No aggressive sellers, and certainly nobody like fully unwinding a position saying, all right, bail me out of this market. I'm done. That's it. I'm tapping out. Does not seem to be the case. So once again, how do we get involved in a situation like this? Either Brigade bolt it up and over 726.50s, trade into this left side peak, and then beyond that, we have to target the all-time high. That would be extension through the upper bound of the weekly expected move. Thinking slightly less odds of that, just noting that we are through the main catalyst of the week. CPI is in the rearview mirror. You know, once again, historic move in terms of speed and distance off the lows there. Digesting sideways via time is not the end of the world. If the market decides to pull back, I wouldn't look to buy it at the 50. I'd look for it to break the 50, get those longs nervous, and then a reclaim, a remount of the 50 would be how to get long on that. Something in there, we call that a classic look below and fail. And if we just tag the bottom end of the range, sure, show me a gap fill reversal off of the 20 SMA, show me a reclaim of the follow through day lows, that's back above 707 after tagging 70170s. It's a long situation as well. Remember, at the end of the day, it's the end of the day. But in all seriousness, at the end of the day, all we're looking for is a higher low to be constructive in this trend count. If this is the last major low, and I'm telling you, we don't really have an hourly downtrend through here. It's not like the market pulled back aggressively. Here it is. I mean, you tell me, where's the hourly downtrend? High? Was that a lower high? Is this a lower high? Is this an equal high? It's not really there. You set a low, okay. So do we have a lower low relative to that low? No, absolutely not. Higher lows happening in here. Higher lows happening in here. Hardly an hourly downtrend. So once again, my main point, what I'm trying to illustrate, from here to anywhere is a higher low. You know, I wouldn't really want to see it beyond that gap fill reversal at 70170, but it's still bullish, right? If the market does continue, we talked about those upside targets. Let's just go ahead and check in on our anchored VWAPs intraday. You can see we're above the entirety of the stack. Notice that the midpoint here is the all-time high anchored VWAP. That's the red down arrow on the Qs over here, as well as you have your Monday and Friday anchored VWAPs right towards that midpoint of the juncture range. 716 down to about 714.25 is the structural lows if you're looking for a precise number around that area. So that's what I've got there. We can hit this with a fib on this chart. I didn't do it on the spiders, but we could do it. You know, we'll bounce back over there in a second. But 38.2 fib is the 20 SMA, is the anchored VWAP from, I believe this anchored VWAP is, where's this anchored VWAP? Yeah, that's the low anchored VWAP from back over here. That looks constructive. Once again, bullish from a fib perspective. And maybe we jump back over the spiders, just hit this real quick with a fib just to see. Yeah, look at that. 38.2 right at the gap close area, right at the anchored VWAP, looking pretty darn good as it relates to the way that those things line up. So constructive on the market for sure. Like, please don't misinterpret any of my commentary here on the NASDAQ as being bearish or like, oh my goodness, markets are going to crash and burn. You know, if it wants to go look above and fail, once again, you could short that if you really want, if you get the tight risk spot back down into the daily 50. But why? I just don't really see, with the supporting evidence improvements, which we'll walk through in today's episode, I don't see the logic for being overly bearish here and trying to knock it out of the park on a short. You're not Michael Burry, and Michael Burry's not even Michael Burry. You know, sure, he had his moment, but how many times has he tried that moment again, and how many of them have been successful? I don't know. Those are the cues. Let's jump on in here to our nasty NASDAQ. Come on, NASDAQ internals. There we go, loading. We've got better volume inflows. Once again, is that bearish? I don't think so. Look at your advanced decline line over here. Bullish over the zero mark. Look at your cumulative build on the tick, closing bullish. Your negative impression on Monday was negative 4,100. Remember, this bumps to a 6K threshold. You want to be negative 6K or beyond to call it a really strong down day. It's just not the case at the exchange level. So, you know, one more time, just to beat the drum, nobody's aggressively selling out of their longs. People want to keep their long position. Nobody's really attacking this on the short side. CPI comes in line. Earnings are just knocking it out of the park. So that's the way I see it. It's all about just finding the tight risk entry, finding the higher lows, or looking for the continuation and being respectful about it, not chasing it like a jerk. Like, let's say this market gaps up tomorrow. You're not chasing that like a jerk up there at the highs, you know, saying, oh, I'm going to long it now. Probably not. You know, you're long in the gap fill reversal or something of that nature. So moving forward into the IWM, and seeing what we got going on over here. Flag break, as we know, trend count bullish, all-time highs bullish there, bull flag, ascending triangle, pennant, whatever you want to call it. It looks good. We know that this is a nice hammer, telling us that the sellers stepped up, pushed it to the midpoint, not even that aggressively, and then the buyers brought it right back higher into the close. Consolidation, up and out, continuation. Very straightforward. If the market's going to shake the flag, you know, you try to break out and go higher tomorrow morning, it fails, fine, not aggressively bearish, but maybe check the low. This last little low in here. Do we shake that out at 299.50s, tag the 300 round number, then firm up and then start to do this? Just a reminder, right? Let's not have short-term memory loss over here. This was a bull flag. You had to shake the lows and then you went higher. This is a bull flag over here. You went higher. You produced another bull flag. You go higher after shaking through the lows. That was a bit more of a gnarly one. But here's another one. Bull flag. You have to take out the low and then you go higher. Here's another one. Bull flag, take out the lows, and then you go higher, right? So the Russell has a history of doing this, and let's just not forget that. right? So just be careful about new money longs. The only way to take those trades is you do it, but you understand where your risk is, right? You need to know where that risk is. Moving forward, the hourly chart's not going to tell us anything we don't already know over here on the Rusty Russell. Let's keep it simple. Look above and fail, 300, firm up at 300, then go in the future, fine. Over this 303.40s, all-time highs, upper bound of the weekly expected move, 306.70s. Let's jump on into the Russell side of the market internals, see what we got cooking up over here. Better volume inflows in terms of a 2-day move. AD line positive, very flat on the cumulative builds here. And on this one, we actually did scratch at an important downside read, negative 2,000 on the Rusty Russell on Monday. That's pretty sustained down print. But if you look at the price action, markets seem to have no trouble gobbling that back up. Well-received CPI report, even closing strong after the morning pullback and washout. So to me, doesn't really look like Monday was all that serious. And if we just go back to the chart, did Monday even make a substantial new low? Survey says no. Did not make a new low versus Thursday's low. So all set here in terms of preserving little march in the upward direction. That's the small caps. Let's take a look over at market profile. I just realized, did we look at market profile for the NQ? We must not have, because I would have been over here on the NQ profile. Nonetheless, here's your quick NQ check-in. There's your value area. There's your value area. There's your value area. Excuse me. Very balanced. Apologies. Very balanced. No real problems in terms of excess on lows. Good excess here. This repairs. A little bit of a lack of material excess on today's session. So 45-degree line into the low. Maybe a little bit of a gap down. Cerebrus earnings, I believe, are causing a gap down over there on some of those semi names. But for now, it's nothing that I would just completely say, wow, the Nasdaq's fallen out of the sky. It's not the case. It's going over to this Rusty Russell on the market profile. You can see the march in the upward direction. Boom, boom. Consolidation, consolidation. Look at today higher. This is important to note. Value is clean to the upside there. So if the Russell takes out value area low of today tomorrow, that would be a little bit of a red flag. Instead of this acting like a weeble wobble and your value area is all pulled up down here, kind of unchanged from this, that would represent a low ability of toppling effect, right? Toppling effect is when this gets top heavy and all of a sudden longs late to the party, they start to feel that pressure as in if we start taking out value area low. So please just pay attention to value area low on the Russell. If you're not a market profile aficionado, just take a look at that. It is perfectly the Tuesday high. So watch your Tuesday high. If you fail back below Tuesday's high, the pressure starts to go on because these late buyers are getting punished. Let's go back on over to the platform here. Let's just give this a reset to our dailies and we'll load up the spiders as we're starting to talk about our S&P sectors. So who was leading, who was losing, and where was the weight? Energy leads the week. That's kind of interesting. Sorry, I take it back. Memory leads the week, up 10.89%. It's sneaky the way that math works on Thinkorswim. Something about 10 being less than 4. I don't know. Nonetheless, DRAM leads the pack. That's bullish, but that chart, it's definitely improved. Please hear me out here. Let's just maybe pull that one up. It's improved quite a bit, but is this chart out of the woods? No. Are we starting to get pattern traders rejoice, inverted head and shoulders? Sure thing. Is this a higher low versus the low? Of course it is. Is this going to be bullish if we break out and take out 55? Of course it is. Should we maybe look back to the 50 SMA? Of course we should, right? That's notable. Look at here on these little down days or just sideways inside bars, really light volume. As we gap up today, higher volume. So in my view, pretty interesting. And I think that there's a real potential that memories come back to life in here. And it just becomes a matter of, does that take us higher? Right? Can we go higher from that group really getting a second wind here? Going back to the main point, though, energy is looking good for potentially higher. Tough trade, but the chart is very clear, right? That is a bull flag. You have broken out of that bull flag. Once again, I don't know if we're just being jerks about it and buying it new money long straight into the left side peak, but the chart looks good for higher. It's inflationary pressure for sure, but as we just saw with CPI, down. So no problems on that. We'll talk more about the CPI problem in just a second because there is a problem with CPI. Your ascending triangle in the XLV looks like it wants to break out. Defensive? I mean, the only reason I say no is because the XBI is absolutely moving and grooving. This looks pretty darn good. Your ARCG looks absolutely phenomenal. Look no further than a TXG, 10x Genomics, right? Take a look at your Twist Biosciences. You tell me, are we bullish or bearish in the biotech space? These charts are flying. And so, yes, healthcare, a little bit more defensive in a classic sense, but the XBI names, those look a little bit more bullish, and I view those as risk on. Let's jump on over to the XLU. Utilities here, getting a little bit of a rebound off of an equal low. I mean, fine, right? Really not going to move the needle for the market. Let's move on over to this IGV. What do we see going on over here? Looks great. Little digestion after a very impressive island reversal off of these lows. To me, this is the new spot to watch. You got to be watching your software. They did Datadog pretty dirty. as you can see over here on earnings, big gap down, rejecting the overhead supply. But outside of that, you've got a number of names in that software space really starting to perk up. So we'll get into those as we get into the trade ideas. Nonetheless, IGV leading sector here as we go out over these double bottom neckline highs and continue to push back into this left side peak over here. One of the problem childs in this is Microsoft, as we'll see in just a moment. Nonetheless, moving forward to XLF, looks good. This keeps the rotation thesis alive, not seeing any red flags over here. This is still marching for higher lows. Could it use a breather? I mean, this is a very impressive rally generally if you were to throw this on a weekly chart. I mean, come on. How much more are you going to ask for on the weekly chart? Almost a perfectly linear move out of this as we went through the JP Morgan, all the big banks earnings season, right? So if we just did this on a weekly chart, is anybody going to be surprised about XLF? Probably not. So, keep expectations in check here, but for now, definitely bullish for the market. Here's consumer staples, not helping, not hurting, just ranging around in here as a defensive sector. That's exactly what you want to see as the market's pushing new highs. XLK looks a little bit better than that DRAM, just in terms of structural improvements over the 50 SMA, breaking out over these left side highs. Looks good. Little gap fill reversal at the lows of today's session. If this could continue to drift higher, that would be bullish. I really don't see the way to argue for bears here. No reversals yet. You've broken a downward trending channel over here. Looks okay. Looks okay. I'm not going to say it looks great. Unless this gap was where you were involved long, it's been tough to get new traction going. But for the most part, XLK is not hurting the market here. Let's jump on over this Mag 7 ETF. Once again, lag 7 these days, but is that a problem? Let's be real with ourselves here. The chart is just whipsawing all over the place. If this could be a little bit more respectful on a higher low pullback, I'm not holding my breath, but if this could be a little bit more respectful on a higher low pullback anywhere over this gap, call it another down day tomorrow, down day tomorrow, there we go, hammer it out on Friday, and then back to up on early next week. Who's going to argue with the weekly higher low? Who's going to argue with the defense of the moving average stack? Who's going to argue with the structural repair? Right? That would be a pretty bullish look if I don't say so myself. Moving back up into these equal highs, I'm not going to purely say it's a picture perfect double bottom, but that's kind of the look. If you could start firming up the right-hand side, get the volatility to contract. What we want to see is less gappy action, right? Gappy action like this, very, very indicative of a market that has no idea what it wants to do. If the market could tighten up and coil up and we could set a higher low and then we get tight back to the highs and maybe we do it one more time, right? And your higher lows keep stacking. That is the bullish outcome where the market's saying, okay, there's more buyers than sellers. You have your stair stepping higher. There's demand here. All we need is a little catalyst. Maybe we spark it up through the highs and go back to the all-time high. It's pure speculation, right? Obviously, look at the chart's current formation. It's nowhere near fully formed in terms of this perfect, wedge or whatever I just drew. But that's what we would want to see. That's what we're looking for over the next few sessions if this chart is going to play a major role in whether or not the all-time high is broken on the Spiders Cash ETF. Going back to the sectors, XLY. Looks okay, right? What we want to see is less volatility, less gappy action. Tighten this up. Show me some support in the moving average stack. Show me some higher lows pushing into this equal high. Previous highs from back over here. Can we Brigade bolt up and over this 119.85? Looks good. Can we shake into the gap? Can we do something that looks like that? Looks good, right? Higher lows. That's what we're looking for. We want this market. And notice we made this rally, for what it's worth, on elevated volume. As we churn sideways here, light volume. So you tell me, in that bar from today's session, are these aggressive sellers? Is everybody and their brothers, sisters, mothers, aunt looking for the exit sign and saying, oh my God, I can't wait to go out there and just sell Tesla. Got to sell it into the ground. I can't wait to go out there and sell Amazon. It's got to go to zero, right? Can't wait to go sell some Home Depot. No, I mean, at the ETF basket level, this is pretty light. This is very, very tame, right? Very, very tame. So looking for that higher low somewhere in here to continue to see a constructive look on the right-hand side in these risk-on heavier weight sectors. Speaking of XLC, heavier weight risk-on sector, nice balance range, nice consolidation near the moving average stack. Can we stop playing Swiss cheese and instead say, okay, one poke into the gap that fails, reclaim the moving average stack, let's get long some XLC names to do something that looks like that. You're going to need a lot of help from Meta. You're going to need Google to say, hey, enough's enough. But for now, that's the look at the basket level of the XLC. Can we support over this moving average stack? Can we leave this gap unfilled underneath us? And can we get some firmer action on the top side? We're over the 50, we're over the 20. Bullish until proven otherwise, but you're right there. You need to do it now, basically. Let's go on over this real estate. Not much of a comment over here on real estate, lightweight sector. Just sensitive to rates, of course. XLB, the lightest weight sector, speaking of. Do you get a Brigade bolt there? Higher low over this 52.30? Maybe. Not really going to move the needle for the market. Here's this SMH, really key test over the next handful of sessions. We've started to break via the gap up this morning out of this balance range. We did set a higher high. We're still underneath the 50 SMA. Some semiconductors look okay. Some semiconductors do not look okay. We'll talk about the good and the bad in just a moment. But for now, I can't, bottom line, cannot afford to get back down underneath about 568s. If the market could stay over 568s on this SMH, okay, not bad. Once again, we'll give it a little bit of the benefit of the doubt, look below and fail, poke that gap a little bit, get the longs a little bit all nervous, and then send it back higher. Maybe that's your higher low configuration. If this could just go gap fill reversal here and then retake the 50 into the end of the week, much, much better look. Starting to, of course, aim at, there you go, pattern traders rejoice, inverted head and shoulders. Let's move forward to this XLI. Industrial's looking good, just balancing on the highs, no problems there. There's the Spiders Cash ETF. Let's jump on into some ratio charts. Let's see where we're at in terms of risk appetite. If you're not familiar with ratios and Thinkorswim, by the way, check out the video tutorial on the top right-hand corner. This looks good. This looks good. This needs some work. This absolutely needs some work. That actually just gets an active X. The reason I'm giving this a neutral is because we do have a chance for a higher low. This is like, meh, don't love to see that, but we'll go neutral tilde on top because of what we know about the XBI. This looks good, not signaling risk off. Same thing down here in utilities. So honestly, not a terrible look. Once again, supporting evidence is drifting back in the bullish and risk on direction. Let's go on over to the A set here. What do we see? Looks good. Looks good. Okay, but probably needs a little bit more of a higher low to firm up and actually break to a higher high. Looks good. Let's just put the check boxes on there. Check box, more checks than X's. Room for improvement, not great on this. Room for improvement, not great on this. But, is there the higher low? Show me the higher low. By the time it looks picture perfect, the market will have already either broken out of the flag or set the daily higher low, right? So we got to keep that a little bit in mind. And the main objective here is to figure out, do the data points indicate an acceleration of improvements or not? Let's move forward from the A set over to the B set and see what we have here. On the B set, we do have an active breakdown of this. Not the end of the world considering the strength of this trend on the gold chart prior. So not going to fault it too much. It could set like weekly higher lows. TLT still looking risk on over here with equities. Bitcoin is saying, hey, I'm not able to do it. I just can't do it yet, not over 67K. Dr. Copper trying to hold this higher low. For the metals guys out there, you got to hold that at 657. As of right now, from what I recall, the copper positioning is a little bit long, crowded long on the commitment of traders data. Let's move from this over to let's go on over to the dollar and interest rates. You can see the dollar kind of firming up on that inline CPI. Seems like rates had a small uptick intraday, but generally closed kind of flat from the previous day. We'll see what PPI does if it moves the needle at all. But honestly, for a inline CPI print, this is a pretty good look. Any miss in expectations of CPI, and I think the market would have struggled much more with rates over here, but that's not the case. So we're okay. We're trying to, I would say, we're trying to give room for a lower high. And if this thing ends up doing that, that's where our PE expansion comes in and markets rally because, hey, rates are lower. We can reprice some of the cash flows here. Let's get on over into inverted ZT. We'll just check in on the Fed tracker tool. Probably unchanged, still looking at a pause in the next meeting and then some hikes a little bit further out. Let's go take a look at this. Give this a refresh and see where the probabilities ultimately lie. Yeah, so an extended pause. How about that? How about that? It used to just be we were here and then we're starting to hike, but look at that. Market is now pricing in a little bit more of a pause for the month of October as well with that inline CPI, and then we are back to 2 hikes over here. So in terms of expectations, the expectations are still 4 hikes in the future. Not 4, but 4 as in the quantity 4. There will be hikes in the future is what the market's pricing in. But for now, the market's saying, not bad on CPI. Now, I do want to talk about this CPI, specifically this shelter side, and just point out that the rent of primary residence actually upticked to a 0.3. Not the end of the world, but we also look over here at the owner's equivalent, and that upticked as well to a 0.3. And I just try to reconcile this. Look at the weightings. Look at the weightings there, and look at the weightings rent of primary residence. Sure. And yet you mean to tell me that we're flat on rent of shelter because of the amount of deflation over in lodging away from home? Question mark? I mean, come on, right? This looks a little bit, I don't want to say like funny business, but for such a heavyweight and important part of the inflation print, I don't know that I am enough of a believer. I mean, look at this. Lodging away from home, including hotels and motels. How many people do you know are going on like a vacation every weekend where this actually moves the needle for their budget? right? I don't see that. So yeah, you might be getting the downtick there, but look at the weighting. I can't quite reconcile this myself. I do think that the shelter print coming in at a 0.1 at a 35% contribution to the overall CPI number is a little bit, dare I say, suspect. So do with that with you will. Am I going to trade this opinion and go out there and say, oh no, the CPI's got to come in hot next time. I'm going to short this thing. It's a fugazi. It's a fugazi. It's going to go to zero. No, that's not how markets work. I'm just saying, if the market starts to pick up on this, if we start seeing headlines about it, if the price action starts confirming it, if interest rates make new highs, if Kevin Warsh comes out and says, yeah, we're really thinking about raising rates, okay, now we know what the culprit is. It's probably the shelter print and the miscalc, or at least my interpretation of a miscalc on that number. Let's go on over to the Forex Factory and just see what else is left for this week. It's the PPI print, the producer price index. What is the producer side doing, which of course will translate to the next CPI, looking for a little bit of an uptick there in terms of both the core and non-core month over month. Aside from that, pretty quiet on the economic calendar. We will watch out for the preliminary, not revisions yet, to the University of Michigan numbers on Friday morning at the 10 o'clock time frame. That is probably the next thing that really moves the needle for the market in terms of intraday action. Jumping on over to the earnings calendar over here, NBIS knocked it out of the park. After the close here today, we did have Cerebras and Coherent. Cerebras was gapping down. Unfortunate for me, I was holding that position. I'm long from lower at like 213s. So there was enough cushion to hold it respectfully, but not really the reaction I was looking for. Nonetheless, thing took a little bit of a haircut. We'll see what it does on the open tomorrow. Probably have to use some 5 and 15 minute rules and just update the stop accordingly. Into the remainder of the week, probably interested in AMAT for our AI trade, of course. Figure, interesting on that stablecoin narrative, noting that Circle actually reclaimed the IPO opening print. Aside from that, not totally interested in much else on the calendar, so we jump back on over to the platform here and we take a look through our additional supporting evidence. Bond markets are telling us, yeah, maybe we should be a little bit more concerned about those inflation prints. This continues to trend in the upward direction. Interesting, especially reconciling that shelter inflation print. Again, it's not enough to make me bearish, but it's something that's in the back of my head. I'm just not fully seeing it. As we look over at credit spreads, the important credit spread, this lower one, is turning lower. That's a little bit more of a bullish data point. Okay, we're back on the bull narrative. Let's go on over to these junk bonds and see what's going on over here. They did start to make a slightly higher high post CPI. Okay, starting to play confluence just a little bit, not bad. Let's jump on over to total breadth. You could see over here as we go full screen on this pane, breadth is not doing anything wrong, but it's not doing anything great. This probably falls into the neutral to bullish category, right? It's going to leave room for rotations, basically. It's going over this RSP, making a new high today. Didn't close, well, new closing high, but also new intraday all-time high. Not bad. Looks fine for breadth. QQQE out there at the highs. Pretty darn good. So constructive as it relates to breadth. You're not seeing a complete deterioration under the hood. Let's check in with volatility, the lowest volatility we've seen in a while. This is constructive for some of those charts that were just wildly whipping all over the place, right? We go on over the VIX and the VIX EQ, or this is VVIX and VIX EQ. Constituent volatility, right? Falling off of a cliff. This is why we're able to see those charts tighten up. It shouldn't come as a surprise when we say, oh my goodness, this XLY, like chill out, would you? This is crazy. This is crazy. This is crazy. This is crazy. Chill out a little bit over here. You go over to your DRAM, right? You're like, would you stop gapping around like a madman? Like, what is it? Is it up? Is it down? Ah, there's your breather, a little bit of breathing action. I'm not even going to say that this is that clean though. Remember, this is like, gap and go to the downside. Then over here, you get a gap up that fades. You gap down and it's bought. You gap up and it sticks. You gap down and it gets bought. You're still pretty Swiss cheesy over here, but at least it's settling down in terms of the ranges. Look at the ranges of these bars. Look at the ranges of these bars. We are compressing that constituent volatility, which, classically, if we're looking for a sustained bull period, you want lower volatility, right? You want lower volatility, nice, easy uptrends, consistent buying. When volatility strikes, it's usually the death of a nice clean uptrend. Let's move forward from this one over to the vol futures. Strong contangos across the board. Still one-day VIX on lows. No complaints through supporting evidence there. So generally, once again, the improvements in the sectors, the improvements in the ratios, and in terms of what we can see from risk appetite perspective, looks pretty darn constructive for higher. So I don't want to be bearish this bull flag just because, it would be too easy to do something like that. Sure, maybe. But at the same time, a little shake of the flag low, catch a higher low rebound, and do that, not the end of the world. Let's get into these core listed company names, and then we'll move right on through today's analysis. NVIDIA staying consolidative near the highs ahead of earnings. This looks great. I mean, little base, double bottom. I shouldn't even call it little. That's a nice long base there. Over the neckline, I would love to see, I personally would have liked to see this gap fill, but we've gone sideways for long enough. We've consolidated for long enough that, hey, another day and then up and out perhaps, or just up and out to go. You wick the bottom end of the gap and do something that looks like that. Not half bad. We'll see. We will see, but this is a constructive look. I like the balance range. Simple balance rules in play. You don't even really need the hourly, but we'll bring it up anyways. As long as you're over 221.75, really constructive consolidation, up and out. Nice knowing you. Let's jump on over to this Apple chart. Kind of a laggard, and not surprisingly so. As high beta comes right back in gear, your Apple is like, okay, I guess we don't need that anymore. We'll sell some Apple where we were kind of hiding over here, and we'll rotate right back into NBIS, right? So I don't like this. It looks bearish. It looks like a little head and shoulders here, failing to reclaim that 50 SMA post earnings. Looks like it wants lower underneath 301. Am I shorting this in the hole at support? Probably not. Probably not. So maybe a lower high and then break. If it does break, wait for the Brigade bolt underneath, but Apple's not looking too hot, looks bearish. If we look at Microsoft, thank you. Thank you for pulling back under 500. These are my least favorite situations where, like, is that a bull flag? Depends on who you ask. For me, no. Incremental higher highs, no thanks. Finally gave way under 500 today. Let's see if we can't get ourselves a little bit of a gap fill reversal, send it a little bit lower, show me something. Let me entertain that gap back over here. 475, 466.25 is the spot to look. And for now, that would align with a beautiful opportunity for a higher low over this left side high over here. One of the gnarliest failed breakouts of all market history. So watching this gap, watching this left side peak as the ideal spot for a daily higher low to start to establish itself. Moving along to Amazon, a lot of people trying to get this one long. I see it. Really constructive post earnings. Maybe a look below and fail. I even tried it long. I wanted to get long 271 reclaim early this morning, the first 2 minute bar or second 2 minute bar. Didn't get filled on options. In hindsight, thank the market gods. But in all honesty, I would have had to stop likely underneath that low currently. But I think it needs a little bit of time. You've made a new lower low. You're officially in a very short-term downtrend on Amazon. I think you could easily wick into this gap, entertain that, build some structure. It doesn't have to happen in a single day back to highs. So you're in here, you're doing this, you're higher, you're a higher low, you're getting sideways, and then maybe something in the future. We shall see. Huge move up on earnings. It could use some time to digest, right? Let's move on over to this Google. I thought it did a good job of defending this actually. Looking at this now, seeing the close, I was not at the desk into the close. Seeing this, not bad. A little hammer action off of what I would consider the must-hold higher low. So Google would be a long watch tomorrow, reclaim, retake, remount, whatever you want to call it, the daily 20 SMA, and try to get it back up into the scene of the crime over here. That'd be 350, 350s. The idea would also be valid if you wick the low, close the gap, and reclaim 341.50s. You're still talking about, you start putting your left shoulder, your head, your right, inverted head and shoulders on like an hourly or something like that. So I like what I'm starting to see here. A little too far, too fast. Is it time to, even if it's just a counter trend move, then we reject in here. It's probably a little bit of longable action in Google back up to that level. Broadcom, show me the 405, please. Show me 405, entertain the gap a little bit, see if we can't get long, then do something that looks like that. Really nice multi-month base, higher low above the top of the base would be fantastic. Maybe too obvious, I don't know, but that's the setup, right? That is the setup. Alternatively, you wick the 8, you're right back in range, and you got to get into it through the gap. Let's move forward into the metaverse. Really nice smackdown today. This was the top short watch. Congrats to those who participated. I actually went long NVIDIA this morning. What do we have on this metaverse? Probably more downside. This is like a day one. Let's see if we can get a day two follow through to the downside under 580.50. Let's go on over to this hourly chart here, and you can just see it. Look at the thin structure. That's what makes me excited. Can we do something that looks like that through the thin structure? Let's go on over to this MU. Let's go back to a daily chart and see what we have here. Not the greatest close in terms of the give back, but holding 900 is important. I would say that for all the people who are like dying to get some MU, you probably want to see look below and fail on the 8 and the 21 and close the gap, or it's the 20 SMA here. You want to kind of see that. Now, in the after hours, it's, 917s. It's slightly higher than the close, but not much. So if we wick this, is that going to be the higher low? Perhaps lows, higher lows, higher lows. That DRAM continues to shape up. The alternative is that you're like, okay, I don't really want to entertain it here. I don't want to be buying this low. I instead want to see it really tighten up, and then your ascending wedge breakout is over about 929. Who let that slide? That's on me. That's been like that for a couple of days now, but 929 up and over that into the 50 is the next target above. Let's move forward over into this Tesla. Let's go take a look at some dailies here. Getting a little sloppy in the cup and handle. There's the cup, there's the handle, breaking out, failing to go higher for a day 3 after an inside day, slapping off the daily 20. Not the end of the world. Certainly have to give it the benefit of the doubt for the longs, but a little bit of patience in here would not be the worst idea. I think you let this thing firm up and then back into the 20. You're starting to work with something that looks like that. So 325.75 reclaims look good. If this is a bear flag and we're lower, I don't even think you want to get that bearish into this low at 319s until we truly, right now, what is it? Pattern traders rejoice, head and shoulders, and lower. So Tesla, give it some grace in here, but starting to firm up. I don't mind what I'm seeing on the daily chart, trying to march in the upward direction. JP Morgan, new all-time closing high, looks fantastic, bullish. I don't know what else we say about it. It's up and out. Up and out, looking good for financials. It's going over to this AMD, not so good. Not so good. Yes, a gap up. Yes, not closing the gap all the way. But, I mean, where are we in this thing? Where are we in this cycle? Head and shoulders, if you ask me. Kevin, rounded top, if you ask me. Is this a higher low? Maybe, but I can't really be all that bullish on it if, we're getting this 50 SMA breakdown, failure here on the earnings day. It's not... I don't look at this chart and think to myself, yes, that's something that I need to buy. I looked at it back here and said, oh my goodness, look at this relative strength. Look at this reclaim. Wow, that looks good. Nuked. See ya later. Okay, back in, nope, not so fast. This does not look like a chart I am jumping for joy to own. If I go look at this Intel looks better than Dell, but it's still not one that I'm jumping for joy to own. It's underneath the declining 50-day. It's just hardly reclaiming that 100 bottom end of the stack, or I shouldn't say stack, but the prior lows from back over here in the weekly high type flag. Is this a little constructive? Of course it is. Is there big volume coming in here? Is there some accumulation perhaps going on? Maybe. If we could go up and out over 102.75s, that looks good. This gap above would be like the first major target to be thinking about. But of course, the 50 SMA stands in the way. What is a chart that I want to own? And what is a chart that I do own? I want to own Dell. Look at this. And then go look at MU or AMD. Sorry, let's stick with AMD because we were ragging on that a little bit. You want to own Dell or you want to own AMD? There's AMD. Here's Dell. I want to own Dell, which is why I own Dell as this is closing up here. What about HPE? You want to own AMD or do you want to own HPE? You tell me. Well, I don't know about you. I own Dell. I own HPE. Many other people do as well. I mean, everybody and their brother, sister's mother is talking about these charts, and for good reason, right? So don't find yourself trying to make something out of nothing on an AMD when those other charts look great. Let's get into some additional ideas, and then we'll finish this video up. We've got NBIS really strong here, out to new highs. I think this just has to be on watch for any check back higher lows above a 50-day moving average, right? You could use a high volume close in here to help you out with some tactics as well. Depending on the way this develops. If we go another day up, please, I don't think you can chase this long here, NBIS, if you don't have it from down here already, or if you're buying it right over the 50-day early this morning. It's kind of the only way that you're either in it already, but I wouldn't be chasing a day 2 up here. Sideways a bit, and then back through the high volume close intraday, sideways or lower into 231, firm it up over these left side highs, 1, 2, 3. Your daily high or low, great. And then we're long if the structure allows for it. Red, green hammer, doji or something like that, inside bar and then up. That would be reasonable. Those are the ways to get involved in NBIS. With this strength, very hard to ignore this chart. Next up, Oracle. I'm just going in the order that I wrote them down. This is not in any particular order of desire to watch one versus another. You'll notice some of them are stronger than others. But anyways, this Oracle closed really weak on Tuesday. Really impressive day back above on today's session. So if we could retake the 50 and go higher, you've got a bunch of thin structure to retake over here. This cup and handle is starting to go. I get it. It's still below a declining 200 day. I think Oracle is starting to show us a little bit of something. Have we found a low? Are we ready to find some bullish action on Oracle? Next up is Palantir, earnings winner over here. Starting to shape up a little bit. This is a 2-day pullback with a hammer. I don't know if I'm ready to just buy it straight over today's high tomorrow, but I will continue to watch, hence this alert, the retest of the earnings high volume close and highs in there. So that's going to be at 162.65s on this Palantir into the end of the week. If we wick down into it, let's say tomorrow, and close strong, let's say maybe tomorrow's bar looks like that as a hammer. Hopefully, keep your wits about you. This should be on your ready list. If there's a buyable opportunity, have your alert set 162.65. I'm not saying just blindly rest limit orders, but that is the spot where at least I would start paying closer attention. Next up, Rubrik. Rubrik looks pretty darn good. Headed into earnings, keep that in mind, but gentle 2-day pullback. You can see the chart similarities here in the leadership groups, right? So either it wicks down into the 8 and the previous left side peak. It's always great when you have a little confluence of the moving average and some chart structure itself. Little pullback and then higher, all the way, higher low. Does it need more sideways into a full-fledged flag, then tighten up, higher low here, and then go? Maybe. Nonetheless, this should be on your radar rubric. How about SpaceX? SpaceX right into the IPO opening print. That is a must watch at 150. The idea here for me would be if we rally and fail to accept above it, is everybody who bought it on IPO open just looking for a relief sigh and say like, oh my goodness, thank God I can get out of this thing for break even? Do we run into a strong wall of sellers at 150? And if we do, is there an intraday short? I traded this a few times now with the options. The options trade decent, very deep in terms of liquidity. Hopefully it wasn't just a one-off day when we were doing that, but let's go SpaceX here. And let's just pull up the liquidity profile. Yeah, I mean, look at this. Plenty of options to go around on, maybe not the open interest side here, but plenty of volume actually transacting on the call and the put side for this SpaceX. I think we could find ourselves into that no problem. You go out a week and you say, okay, look, there's even volume out here. There's even volume out here. So you don't have to feel like you're getting pressed into the 0 days. There's liquidity across the chain on that SpaceX. So 150 IPO opening print retest is a top short watch on a look above and fail. Not just blindly shorting it, but look above and fail. If it accepts over 150, let's just mentally reverse what I just said. If everybody like myself is saying the same thing, and okay, here we go, 150 IPO opening print retest, it's got to be a short, right? Overhead supply, and yet it accepts over 150, how many shorts who continue to throw money at that intraday are going to get burnt, and how many shorts are going to get squeezed? Just an idea. I don't want to be the guy, it could do whatever it wants at 150. Markets can always do whatever they want, as we know. But it's a must-watch level because there's a lot of participation that's likely to take shape here. So that's SpaceX. Next up, we move on into the back half of the watch list, which is going to be CHYM. CHYM does not necessarily look like it's ready right now. It's a great inside day. But we're still extended, right? A little stretched here, but I think it's got to be on the radar. How could it not be? Look at this big, let's just go out to a yearly. Look at this. Is that a base that's breaking out? Are we breaking into a stage 2 uptrend? Certainly seems like it. Big volume here on earnings. Earnings gap is holding. It has not gone lower. So this has to be on a radar as well. CHYM looks pretty good. And then we go on over to Carvana, which is maybe early stages, getting ready for that stage 1 base breakout. There it is. Failed breakdown here. Some consolidation sideways underneath the 74. It could shake all the way to the 50. Shake, rattle, and roll. And let's see if we can't go up and out from there. Do I really want to be buying the car vending machine? Not really. But I do think the base analysis is at least worth keeping on a radar. I know a bunch of shorts are getting out of this after these lower high shorts kind of were a pain in the butt for a long while before ultimately, now we're actually taking out that 200 SMA. So that's Carvana, which reminds me, this is not one of the 9 I was thinking, but let's go Shopify. Shopify, great base. This is broken out on earnings and is now constructive above. We've talked about this one in the past, but there it is again. CRDO gives me nightmares, but I have to keep it on a watch list. I had this at 243 on the Tuesday session, and now here I am flat as of Tuesday's close with the gap up today. So not quite doing it, but CRDO on the radar, something that closes the gap, something that entertains this. It's a great look. It reminds me exactly of the final trade idea, which is Teradyne. Teradyne is the final. You could see here your double bottom, your 50 SMA. Little sloppy through here at the 50 SMA, but nonetheless today a really constructive day for the top side. If this could close the gap over 380, interested in entertaining longs for something back up over there. This has been a leader. And another one, just because they all come to mind when you start looking at things that look the same. This STX I thought was really impressive for the memory complex. It's the cleanest chart. I've been saying this for a while. If you come out to the morning shows, you've heard me say this over and over again. If you're in the group, you hear me say this all the time. STX is the most symmetrical little base that we have in the memory names. It looks better than MU. It looks better than SanDisk. It looks better than SK Hynix. It looks better than WDC. So STX, this could start to get in gear over the 50, right? This is certainly compressing, and some clean movement over the low cheat would be interesting. This thing is a high flyer. Look at the price point and look at the ATR. An absolute monster of a stock. So that's what I've got for you in today's episode and installation of the Midweek Market Update video. If you enjoyed it or learned anything new, let me know down below in the comments section or by giving the video a very simple thumbs up. As always, we'll be live tomorrow morning for another episode and installation of the pre-market prep that always kicks off at 8 a.m. Eastern time, where we'll build a game plan for the day ahead with the latest data in hand. With that being said, have yourself a green rest of the trading week, and as always, I will see you in the next one.